Hi, we're back with an early concise highlight on Friday, September 25th, 2015. It's currently 7:45 a.m. U.S. Central Time, and it's going to be concise today because the only thing we're really going to look at is the S&P 500 with comments on the balance. The reason for that is even though it has improved markedly this morning, the counterpoint between equities and the influence of equities elsewhere, counterpoint into govies, that is, remains much the same as covered in Thursday morning's extensive global view. So, what we have here is in fact the reversal of Janet Yellen's downbeat assessment a week ago Thursday in her speech yesterday evening that has now led to a thought the Fed will maybe still hike this year, but somehow or another that's good for equities. We'll have more on that in a moment. So the question is, what does all this mean to the markets? And ultimately on the S&P 500, the market is up 21 at 1940. And it has been as high as up 31 at 1950. But you'll recall, and we'll revisit on the intermediate term charts of the S&P 500, that 1950 is the old bottom of the gap from late August on the lead contract gap lower on the week from 1970 down to below 1950, but the remaining gap after the bounce on Monday, August 24th, was 1950 as the low end of the gap. The high of the day that Monday, that is still a key area. So great improvement except for one thing. So far the market's only back to resistance, and we're going to highlight how that might play in the next week on the intermediate term charts. But for right now, being up once again to 1940, this market is basically rescued itself from the bigger lower support down around 1900 with a tolerance to 1895. We highlighted that yesterday morning early, and you can see how the bears even tried to press the market into lunchtime here again. Couldn't even get it quite back down to 1900, and that kind of sealed their fate as the market ran back up above the next threshold right around the 1920 area. 1930 was also another key interim level on the daily chart activity. You see 1928 to 30 here in December contract, even though 20 is the bigger historic and lead contract congestion. So this is the game we're playing right now, with maybe not a huge surprise. This market went all the way from a test up near 2015 last Thursday early afternoon, right after the Fed notes were released. The Fed statement in the beginning of Janet Yellen's speech that was more downbeat, all the way down to holding 1900 in front of her speech this week that ended up being more constructive. The one thing we do know technically, though, is that the hourly MACD, which dropped below the lower runaway band last Friday morning, a week ago today, and on any of these near-term recoveries, once it was under pressure, could not get back above the lower runaway band, will most certainly be back above it, relieving the downside momentum. So this is back from a bearish bias to a more neutral market, but then needing to see how it does back up into key levels like 1950 or 1960 or the old top of that gap up into the 1970 area. And that pretty much does it for the short-term view of the S&P 500 to wrap up this week.